Hey, what's going on, guys? My name is D. Anthony with Evolution Traders. Now, it was brought to my attention that some of my videos, I make a lot of rebuttals and I diverge from the topic at hand. That makes it extremely hard to follow along on the videos. It was also brought to my attention that on the 1 minute scalping strategy using the 9 EMA, you really don't know where the strategy is triggering for entries. It's very simple. So in this video, I am not going to diverge or use any analogies or get away or rebut the topic at hand. All we're going to look at is when this strategy triggers a setup and when potentially you could take a trade. This is the 1 minute time frame. This is the 9 EMA that you see on the screen. We are looking at the NASDAQ 100. When the NASDAQ 100 opens at 6:30 a.m. Pacific Standard Time, it is already trading above the 9 EMA and puts in a high price of 16,873. We failed to break that high price, which is why I made this resistance line at the top of these wicks. If we do break to the long side, I would consider taking a long trade there and using a previous 5-minute candle as a stop. This strategy using the 1 minute time frame and the 9 EMA is going to trigger, meaning it is going to give you a reason to enter the trade when we close below the 9 EMA or we close over the 9 EMA. For the purpose of this video, I went ahead and put red arrows and green arrows every time the price action closes below the 9 EMA and closes over the 9 EMA. This is not a special indicator, but in fact, I went through by hand and put these arrows every time we close over and under the 9 EMA for your viewing pleasure. Notice how this candle closes below the 9 EMA. However, in order for us to be triggered into a trade, we need the following candle to confirm the low price or the low wick of the candle that closed below the 9 EMA. Hence, this setup does not give us a reason for entry. However, this candlestick at 6:42 a.m. Pacific Standard Time does give us confirmation and a reason to enter the trade. Our stop loss would be a low below the previous 5-minute candle. And essentially, we would be risking $7 or 7 points, not dollars, points. We would be risking 7 points on this potential trade. We would also be trying to target a total of around 7 points on this trade. Now, from a high price of the reason why we're getting in and the entry price of around 16,864. In fact, we watched this trade go to 16,872. So we do in fact get almost 6 to 7 points off of this move. However, if you don't take profits at 6 to 7 points, it would have turned around against you and it would have been a losing trade. Next setup triggers at 6:44 in the morning Pacific Standard Time. The range of this candle is 16 points, and that is what we would use as our stop loss. On this particular trade, the following candle does confirm the low price of the candle that closes below the 9 EMA. On this particular trade, it does hit for a 1-to-1 risk to reward, and you would have made at least 16 to 17 points bare minimum on this trade. You could have also made a little bit more money on this trade if you would have held it longer. Example of a reason why you would hold this trade longer than a 1-to-1 risk to reward is because we are still trading below the 9 EMA. The moment the candle closes or price action gets back above the 9 EMA, which is here at 6:58 a.m. Pacific Standard Time, would give us a reason to exit the trade at a price of around 16,830. Our entry price, if I can note, would be around 16,800. 855. So in fact, this one trade could have been taken for a profit of around 20 to 25 points. Notice how this setup here does confirm, however, the range is 10.5 points. It never confirms for a 1-to-1 risk to reward ratio, making this trade a loser. The next trade that sets up on the 1 minute time frame is at 7 a.m. Pacific Standard Time. The reason why it would trigger an entry for a short position is because it closes underneath the 9 EMA. Notice how I put a red arrow on this candle at 7 a.m. that closes below the 9 EMA. Our entry would be when a following candle confirms the low of the candle that closes below the 9 EMA. Your entry price on this particular trade should have been around 16,828. We are in fact looking for 10 points on this trade. The low price of the 702 candle hits a low of 16,804. And as you can see, would have gained you a 1-to-1 on this potential trade. This third trade would have been a winner. The next trade that presents itself is here at 7:07 Pacific Standard Time. And the reason why this would trigger an entry for a long position is because the 707 candle closes above the 9 EMA. The 708 candle confirms the high of the candle that closes over the 9 EMA, triggering an entry. You would use the low of 707 candle as your stop. On this particular trade, you would be risking 9 points and be looking for a 1-to-1 bare minimum risk to reward ratio for a total of 9 points. This trade also is a winner. Examining the 4 examples that I gave from open to around the first 45 minutes of the market, you could have essentially taken 4 trades, lost 1, and been profitable at least 25 to 30 points in the first 45 minutes of the market open. One of the strategies and trade plans that I like to present to a lot of newer traders is to trade 4 or 5 micro contracts and try to target 30 points taken out of the market each and every single day. Big disclaimer that not every day will be a winning day, and not every day trades will pan out as expected. However, if you can trade 5 micro contracts and try to total a target of 30 points, you could essentially make $300 a day trading futures. Mind you, not every day will be the best day. Not every day will present fantastic moves. Thank you for watching the video.